Hi, welcome to the 12th episode of the Javid Podcast. Today, my guest is David Peterson. He is a venture capitalist who's based in London when he graduated from Dartmouth College. And also, I believe he obtained his MBA from MIT, right? David?
That's right. Yeah,
Yeah.
that's right.
And David mainly invests in deep tech B2B space, but I'm sure he has other investment interests too, and we'll talk more about that. But I just want to give you a chance, David, to kind of introduce yourself and your journey, how you ended up in your current role in venture capital, and I guess just your educational and professional journeys that took you to your current position.
Sure. Thanks so much for having me. Yeah, really excited to chat with you today. So let's see. So background on me. I grew up in upstate New York,
Mm-hmm.
close to Albany, New York, if you know where that is, and not too far from where you are.
Yeah.
And yeah, as you said, I went to Dartmouth undergrad, and despite uh, majoring in government and history, which have essentially nothing to do with anything I do now. I ended up working at Google actually, so that was my first job out of school. Um, so applied. I remember I had no idea what I wanted to do with my life, so I applied to google.com/jobs, just threw my resume in there and was lucky enough to get a role. And that really kicked off my career in tech, right? I found Google to be fascinating and learned a ton about how technology companies run. Um, but it was way too big, right? And this was in 2010. So Google was, I mean, a relatively young company in comparison to where it is now, but it was still public and large and, 10,000 plus people at that point. So it still felt very large. So very quickly, I just wanted to figure out how to get into startups and so worked at a startup in New York, and then bootstrapped a company of my own, and then as you mentioned, I ended up going to business school, and then when I was at business school, I was really lucky to be able to work at a VC firm called Founder Collective. Very quickly decided to spend essentially all of my time at Founder Collective working with them, learning from them rather than my time at my MBA. Um, and then worked at Airtable after I had fallen in love with the Airtable product. I was like a huge Airtable fanboy. I was lucky to get an introduction to the CEO of Airtable and kind of convinced him to let me join early. So I joined as the first like growth and go-to-market person there, and then led growth and a bunch of the go-to-market teams over the years for 4.5 years. As part of that, I moved to London to work on European expansion for Airtable, and then ended up sticking around London. Kind of fell in love with the city. Really, really impressed with like the entrepreneurial ecosystem, throughout Europe and Israel, and was really lucky to end up kind of finding my way into venture. It was never the plan, but I started investing 3-4 years ago now. And it's really funny looking back. I think this is true for everybody, right? You look back and it seems so linear, but there were all these moments across that path that were highly both pivotal in retrospect, but also like highly uncertain and seemingly random in the moment. I didn't know, you don't know what's going to happen next, right? But very grateful for where I am now.
That's fascinating. Do you think you would do anything differently if you're looking back, or do you think it just
Hmm. It's a good question. I mean, it's so hard to know. It's so hard to like run the counterfactual,
yeah.
right? Like, a question I get all the time from folks is, should I go to business school, right? Since I went to business school, right? I feel like that's a common question for, especially people early in their career who are like maybe a little unhappy, and they think that somehow business school might solve
Yeah.
that problem, right?
Yeah.
And, I feel like, uh, I have such a hard time answering that question because I didn't really particularly want to go to business school. I kind of like did it for, I basically did it because my partner was going, and I was like,
Mhm.
well, we both got into the same school. I applied to one school, and she happened to also get into that school, and I was like, look, like I feel like this is the universe telling us something. Maybe we should just go, right? I really but it was not like my dream, and it didn't feel like a pivotal decision. But I look back on it, and it's probably the only reason I am where I am today. There's all these things that sprung from that decision. So my takeaway from that is basically everything is entirely unpredictable. Like, you don't really know where it's not like you make this one decision and now that means you're going to follow this linear path in that direction, or you make this decision and you're going to follow the linear path in that direction. There are 100 future decisions and turns that you're going to make. And so it's less about that one decision, and it's more about just constantly being self-aware about what direction you're going in and what opportunities are in front of you, and opening different doors and peeking through different windows and trying to figure out your path.
I see.
Rather than that's why it's so hard to say, like, go back and make one different decision. I don't even know. I'm not sure what that would change in the end.
That's so fair.
Yeah.
I have so many questions. Venture capital is something I personally have huge passion for. I know, I'm more interested in like life science, biotech investments, something to do with science and innovation. And usually when you look at the space, you see people with like PhDs and MDs, doing the investments. And it's understandable. You definitely need a certain level of expertise to understand the science, especially if you want to invest in early stages. You also invest in deep tech, right? And even in B2B and all that. Considering, you have definitely a significant experience working in the startup ecosystem and also like even in Google. But, well, I'm just curious, like, when you don't come from a tech background, how do you evaluate, or like even, when you make deep tech investments, right?
Yeah.
Like, especially at the early stages when it's just mostly like it's the product and the founding team. There's not much really going on.
Sure.
Sometimes they provide demo, but not always, right?
Yeah.
How do you evaluate them? How do you?
Yeah, I think I think it's more art than science is the reality at our stage. I'm a very early stage investor. We say first check, pre-product, pre-revenue very often is when we're investing, right? And so as a result, I think there are lots of questions I'm always asking myself, and we can talk through those. But I think kind of fundamentally what you should be thinking about is, what kind of risk am I taking? And I don't think I am smart enough, to take a lot of deep science risk or like deep technology risk. I think that is really, really hard. And in fact, that might not be the role for venture, right? Like, maybe venture is kind of better suited actually for, maybe like grant funding is better suited for pure science risk, and venture is a little bit different. But anyway, I often think about that, like what is actually the risk here, and really trying to be very clear about where that risk lies, in the business. And I think that helps a lot in driving the way that you run a diligence process as you're trying to understand a business, because you certainly need to, like, we always try to one thing we always talk about internally here is, we're trying to pull together the best, like, virtual investment committee we can for every single investment we do, because we're a partner only fund. It's just me and my other partner, right? That's it, right? We don't have like a bunch of associates doing research for us, or operating partners or whatever, right? Like, it's just us. So whenever I'm looking at a new company, I think like, okay, where is the risk in this company? What are the questions that I want to answer? And what is the best like group of people I can bring together who can help me think through this as quickly as possible? And sometimes that looks like a ton of tech diligence, right? And there are moments or there are investments we've done where, we'll like bring in some deeply technical friends of ours and jump on a 2-hour long call, and all they're doing is like grilling the founders on why they've made different technical decisions, and right. And it's like, we are going in the weeds, right? Sometimes that is the right thing to do. But sometimes it's not, right? Like sometimes there isn't that much deep tech risk actually. It's like the technology is sorted out, right? Like it's kind of clear that the tech is there. And instead, a lot of the risk is actually in the team, or it's in the market, or it's somewhere else. And then you're going to construct an entirely different kind of virtual investment committee to help you think through that. But generally, I'm always trying to think about what could go right, right? Like what are once you kind of get comfortable with the basics, then I'm really trying to think through how, if everything goes right here, how big is it? Because that's ultimately what matters, is like the market needs to be humongous, you know? So that's a question I think a lot about as well.
I see. You mentioned risking a lot, and I have somewhere down the line a risk question. But I'll just ask now because you already mentioned it. How do you assess risk at the early stage? And when you say risk, what do you like focus on? Is it like the management team, right? Like let's say putting aside the technology, but even if technology, what are the main risks that you usually like try to get out of the way before starting thinking more about it?
Yeah, sure. I really think it depends on the company, and I would encourage the entrepreneurs out there to guide the investors that they're talking to as it relates to this question. Like and this is what I'll like coach the teams that I'm working with on is I'll say, look, like you're going to spend the next 10 years of your life on this thing. So why are you convinced that this is the right thing to spend the next 10 years of your life on? What are the questions you've asked yourself? And what's the evidence that you have gathered that convinced you that it was the right decision? If you can share those questions and that evidence with investors, that's probably the most convincing stuff you can bring to the table. And it's helpful because ultimately, like the founders that I work with know 1,000 times more about their area of expertise in that business than I ever will, right? Like no matter how long or much I try, like it's just different. It's a different job, right? Like I'll never know as much as them. They are so the questions that they come up with will be much more informed, much more nuanced, and much more representative of the types of risk that they are probably taking than any kind of form check the box risks that I come up with on the fly as I'm talking to them. Yeah, so anyway, that I really do think like these risks might fit into a category, right? There's like a category around market risk and a category of execution risk, and right, like those are categories, but the specifics and the specific evidence that would convince you otherwise, that is all very particular to the business itself.
Very fair. And I guess one thing I'm curious about, like when you do your investments, how do you approach that? What's your investment philosophy, right? Could you explain kind of like the key things you look for in your startups and the founding teams? How do you differentiate potential success stories from multitude of pitches you hear, right?
Yeah. It's a good question. I have a pretty, I don't know if this is a hot take here or not really, but like my point of view on this is that at the earliest stages, I think it can be really dangerous to be super thematic. So there's a lot of funds out there that are very thesis driven early on. And I don't think I'm smart enough to do that. Let me just put it that way, right? Like the thing that I'm always worried about with being too thematic or too thesis driven is that, let's say I spend 6 months of my life trying to learn about a certain space, right? Trying to learn about whatever, some sort of like direct air capture technology or something. So I learn everything there is to learn about it. I talk with 50 people, I write a few blog posts. I do a few market maps, all the stuff that VCs do. At that point, I will be, my worry is that at that point, I will be so desperate to find a direct air capture company to invest in just to like prove myself right, right? Just to be like that was time well spent, right? I'll be so desperate to find one that I'll invest in one, even if it's not a good business, right? Just because it'll make me feel smart. And so I'm very wary of that dynamic. I can see that I can feel it. I can see it happening with myself. So I'm very wary of it. So, instead my approach is basically I want to come into every conversation. This is why we're B2B, deep tech investors, but we're very much like generalists within B2B on purpose, right? And founders will ask me like, what sectors are you excited about? And I'm like, none and all, right? Like I really try desperately to stay as generalist as I can. And then I want to approach each new conversation as if a brand new babe in the world, right? Like as if I've never heard this before. I want to hear it for the first time. And I want to try to see if I can find like hints of greatness in the idea. And that the real challenge, by the way, is actually coming into a conversation fresh, right? Because there's a weird thing that happens in the startup world, and in technology in general, which is that there are these ideas where it's like the time has come for the idea. And as a result, there will be teams all over the world who are not coordinating in any way, but they're all working on the same thing at the exact same time, right? And that's a real challenge as an early stage investor because one, it's really hard to know, like, you have no visibility into all the teams, right? Like it is impossible to know all of the teams that are working on the same idea if you're really early. And it's really hard to figure out who's going to win, right? Like how do you know if everybody's working on the same thing at the same time? But anyway, my point of bringing this up is that it's very common for investors, because of this dynamic, it's very common for investors to hear the same idea multitudes of times, right? Like 10, 20, 30 times, I'll have heard the exact same idea. So the hardest thing for me is to not come into that conversation with my ears closed, right? Like I need to approach that conversation as if I'm hearing it for the first time. That is the challenge. That's what I try to do every day, is actually try to hear ideas fresh. And then what I'm looking for, to getting to your question, is ultimately, like, look, there's a lot of like business fundamentals that I think matter, right? It's, you're often like, I'm always asking myself questions like, is this like a marginal improvement over what it currently exists, or is this like a step change? Is this 2x better or 10x better, right? Like that sort of question. I'm asking myself about like, does this product have some distribution edge, right? Is there some way that they have some unfair advantage in how they're going to get out there? And do they have an accumulating advantage over time? Like as they grow, will they grow faster? Is there something kind of baked in to the business itself that will enable it to grow faster? All of which is just trying to answer the question, how does this company get to 100 million in revenue as quickly as possible, right? Which is like that's the fundamental question ultimately. Often, like those are all interesting questions, but often what matters more than anything else is the team. And when I think about the team, the question I always ask myself is the same question that, a mentor of mine, this guy, Eric Paley, who is one of the partners at Founder Collective, he always used to ask the question, is the team all over it? That's what matters, right? Did they see around every corner before you even knew there was a corner there, right? Are they all over it? And that, I think, is exactly the right question. That's the question I'm always asking myself. And it's both a very high bar and very wishy-washy, right? It's like it's not like I can check a bunch of boxes and tell you, yes, the team is all over it. No, there's a feeling to it as well, which I think is actually important because, as we said at the beginning, right, this is really more art than science.
I see. No, yeah, from what you're saying is, I gather is that you essentially want to keep a blank paper and focus on your intuition when you go into the kind of like the new meeting with the founders. But when you meet founders, first of all, I'm curious, like, do they kind of like approach you? Do you find a way of kind of like staying, looking? Because VCs is very much like trend based too, right? Like now
Mm.
sustainability and AI is kind of the big thing, right?
Yeah.
And people like really try to invest in that space. Do you is there a way for you to just like look and find founders, or like does it like come to you? And another thing I'm curious about is, when you hear a pitch, what do you think makes a good pitch? And
Mm.
also, like, sometimes the pitch is really good, and but the product might not be great, but then the product is good and the pitch might not be great, right? So how do you like differentiate, and how do you what's
Yeah.
your method?
Let me answer that second question first, because I think the first question is a much bigger question
Yeah,
we can talk about
yeah,
for a while.
yeah.
So the second question, I think, like, look, you're right, right? Sometimes pitch is bad, product's good, or product's bad, pitch is good, whatever. Um, that is true. I think probably though, you need to invest in the companies where both are good, right?
Mhm.
Because there are certainly examples of either working and being a good outcome, right? Like a bad product, good pitch working, right? And vice versa. There's certainly examples of that. There's always exceptions, but I think the reality is, you need to, like, for a company to succeed in a business that is, like, the startup world is incredibly challenging. 99% of these startups are going to fail, right? It's super competitive. It is hard, right? For you to succeed in that world, you need to have an amazing product and you need to be able to tell an amazing story, because the product is what's going to make you money, from customers, and the storytelling is what's going to help you hire. It's what's going to help you raise follow-on capital, right? That story is going to be an incredible unlock for you as a founder over time. So, I think that it's it's an underrated skill, right? To be able to tell the story well.
Mhm.
Um, and it reminds me also of the idea that, the you don't know something until you can teach it, right? You don't know something until you can write about it. I think it's kind of true with pitching as well. Like, I don't think you really understand your business until you can turn it into a tight 10, 12 slide deck, and you can talk about it, right? And you can teach some dumb VC about it and make them feel smart in 10 minutes, right? Like, that in and of itself is a skill that is worth practicing and honing. So I wouldn't underrate that, right? Okay, so that's that part of it. Now, that your first question was more about like trends, right?
Yeah,
And it was a combination of trends and
like the
how do you
fund.
find people and all that. So yeah, a few answers. Look, like, the first thing is, we are lucky to have founders emailing us and sharing what they're building with us, and I'm incredibly grateful, like, every time I get an email that somebody would reach out. But the reality is that this job, like, you can't sit back and wait for people to find you. Like, this job, you have to hustle, right? I always ask myself the question, like, why would the next great entrepreneur know me? Why would they know that I even exist? Why would they want my money? Right? Like, there's no reason that they would be tracking me down. So I have to track them down. That is the job, So this is something that maybe, I think most people who look at venture from afar, don't really realize, but venture is a sales game. That is what the job is, right? And I spend most of my day just uh, outbounding, right? Like, that is the job, right? Is just to track people down and try to get them to talk to you. So that's the first thing. And I think, by the way, like the minute that if we talk in 5 years and I'm singing a different tune, if we talk in 5 years and I'm saying, oh no, like we have an amazing inbound funnel, blah blah blah. If that's what I'm telling you, from my point of view, that means that I'm over the hill, right? I've lost it, because I think you need constant. You need to be in the game. Like if you are not in the game, why are you ever going to be able to invest in the next great company? So that's the first thing. Now, in terms of like investing in trends, I'm like, I mean, this is the same. It's kind of the same, or it's a similar answer to before about being kind of anti-thematic. I'm so anti-trend in general, and I think the way that you can, if you want to convince yourself of this too, the way to do it is to go think about what the trend, go back in time, look across the past 5, 10 years, choose a year and try to figure out what was the trend of that year. What was the thing that everybody thought was hot in that year? And then try to figure out what is the company that made the most money from that trend. And then look at when that company was founded. And guaranteed they were never founded in the year where the trend was hot, right? So like you just mentioned AI, let's say, right? I think it's way too early to actually know who's going to win with AI. So maybe it's not a useful example, but we can, just because it's more recent, we can use it, and we can talk about some old ones too. But with AI, like you think about, okay, who is the big winner in AI going to be, right? If we look back 5 years from now, who's the big winner in AI going to be? Probably, that we can debate whether incumbents or new companies kind of win. But I think we can somewhat uncontroversially say that OpenAI is probably a big winner, and maybe a bunch of incumbents, maybe Meta and Google, let's say, are going to end up being big winners if Google can get their act together, right? When was OpenAI founded, right? Not 2023, not 2024, right? It founded almost a decade ago. When were they working on large language models, like the thing of 2023? When was everybody working on, when were large language models first really right? 2016, 2015, right? So and you can do this exact same exercise every year over the past decade. And what you'll see is that whenever something is a trend, the company that matters for that trend was founded 5 years before that. So as an early stage investor, I should be investing in things that are definitively not the trend. If I'm investing in the trend, I'm too late. By definition, I'm too late. So I need to be investing in the thing that, somebody said this, I think it was Keith Rabois said this. I think it's incredibly wise, which is basically every investment I do, at least half, if not 70, 80% of my peers should be talking behind my back about it, how I'm such an idiot for making that investment. That, right? People should think it's stupid. If people don't think it's stupid, it's not risky enough. If everybody thinks it's a good idea, by definition, it's too late, right? If you're an early stage investor, it's different if you're like a growth stage investor or something, right? Obviously, but if you're really early, you should be investing in stuff that most people think is idiotic.
Dude, I know we don't have a lot of time, so I can talk to you for hours. Really, it's just I'm personally so passionate about this space. One thing I'm curious about, right? Like being a venture capitalist, are you born a venture capitalist, or do you become a good venture capitalist, right? And by being born, I mean like a good venture capitalist, right? Like I was reading, I was reading about this. I forgot his surname, but his first name is Jeremy from Lightspeed Ventures, and he apparently realized that the startups that really do well are the ones that cater to young women. And one time his partner was like, "Oh, my daughter is using this new app. It's kind of like it's popping, the Snapchat, right?" And he ended up reaching out to Even, and they ended up investing like 485,000 the first round, and I think 8 million in the second round. I mean, there was a lot of, I mean, I still believe a huge portion of it is luck too, right? Like luck with anything in
Yeah,
life, you need luck. And it's kind of a bit of a gambling too, right? Like you gamble with your decisions. But then
yeah,
there's also like is this weird intuition that some people have where like they can kind of see into the future.
yeah.
So like, do you become a good venture capitalist? What makes a good venture capitalist?
That feels like the billion-dollar question, really. I, I think that I think one trait that is common among all of the venture capitalists that I really admire
Mhm.
is that they are very comfortable being the dumbest person in the room, right? So they are comfortable asking the question that feels kind of stupid that nobody else is going to ask. That's one thing that I think is really important. Related to that is this idea of being kind of like fundamentally curious and a lifelong learner, like that mindset I think is really important because the reality is the venture market changes fundamentally every 5 years. If we were talking about venture 30, 40 years ago, we would be talking about semiconductors.
Mhm.
Like, that was what venture capital was. It's changed so much over the years. And so you always need to be ready to learn about something else, become an expert, not an actual expert, obviously. No VCs are experts in anything, but get up to speed, right, on something else as quickly as you can. So that kind of mental agility, I think is really important. Um, and I think the last thing is that, the best VCs are fundamentally optimists.
Mhm.
You can't be in this business, about you can't be focused on protecting your downside, right? You have to be focused on the upside, which is why, like before, I mentioned the question of like what can go right, right? Like you have to be asking yourself that question. What if this works? How big could it be? I think that orients you in the right way. It orients you towards finding huge businesses, right? Huge potential businesses, at least. And it also orients you towards thinking through the right sorts of problems, and yeah. So I don't know if you're born with those things. I don't particularly think so. I think the debate that, there's this constant debate like on Twitter. It's like every 2 years or year or 6 months, whatever. There's like this debate on Twitter about, are the best VCs former founders? Are the best
Mhm.
VCs, former operators? Are the best VCs, lifelong VCs, whatever? I think it's like so clearly a made up debate because there are amazing VCs in each of those categories, which suggests to me that anybody can become an amazing VC if you have the right mindset and focus
Mhm.
on it.
Mhm. I see. We don't have a lot of time because you mentioned that you have a call in a bit. So I guess I also didn't really follow the script. I kind of asked questions, following our conversation.
Yeah, of course. Yeah, yeah.
But I guess one final thing I'm curious about is what are the new things that really excite you? Like what innovations, the ideas? Do you have any predictions about the landscape of, let's say, deep tech in the next coming
Hmm.
10 years? What what technologies like really excite you, and
Yeah.
you are really trying to. I mean, you don't have to give out any secrets, obviously, but I'm just curious about your opinions. And also, one final thing, if you have time to
Yeah.
mention, I would be curious to know, like, how do you think you're based in London, and I
Yeah.
know venture capital is intrinsically has always been a more American thing because of how much capital is available. Do you think it's an issue when you make those investment decisions as well?
Yeah. Let me answer the second question first. Again, so uh, look, I think that you're generally right, which is the U.S. venture capital ecosystem is much deeper and more established,
Mhm.
and as a result, that's not to say. So I think it's easier to raise capital there, and there's also smarter capital there.
Mhm.
As a result, I mean, I don't think that there's some like capital gap in Europe, right? There's a ton of capital here, right?
Mhm.
Like anybody who wants to raise money can probably, like generally you can raise money here, right?
Mhm.
That's not the claim that I'm making.
Mhm.
Uh, but I think there's much more sophisticated, like smarter capital with a deeper bench and like a more experienced ecosystem of later stage operators and everything in the States. So as a result, I invest across Europe and Israel, but exclusively we just talk to companies about how do you get to the US as quickly as possible. Both because I think it's a better place to grow, as a or it's a better market to build in and to grow your product in. You can grow faster. You'll be competing against the best, and that's a good thing, right? Like you want to be competing against the best from the very beginning. And there's also more follow-on capital available. So I think it's just anyway. I'm here and I'm looking at this ecosystem, but I'm very much like I'm an American VC that just happens to be forward deployed, on this side of the Atlantic, and
Yeah.
very much thinking about everything with an American mindset. Um, yeah. So that was the second question. What was the first one again? I forget. I'm sorry.
The things that really excite you in the space, and if you have any predictions
Oh,
about the
right.
future of any technology,
Yeah.
especially in the deep tech, I would say.
Yeah, sure. So, I don't think I'm not going to be able to share with you any like particular tech prediction.
Mm.
I think if you're looking to VCs for tech predictions, you've gone far astray, right? Like they have no idea what they're talking about. Go talk to some founders for some actual tech predictions. The way that I've been thinking about it is more broad than that, which is like, okay, what are like the macro trends over the next 10 years that probably matter, and suggest that there will be large markets. Like there will be large markets, and there's a macro market trend that is for sure happening, suggesting there will be big businesses to be made if you're able to like catch the wave, right?
Mm.
Um, and I think like there's some really obvious ones. I'm not saying anything particularly profound here, but like one really obvious one is um is energy, right? Like energy demand is increasing in the US for the first time in a long time. And that's driven by data center demand, right, which is largely driven by AI. And that's also driven by just broader electrification, right? People, more electric vehicles and chargers, more, right, heat pumps, and more like all of this stuff needs electricity, right? We're not using coal and gas and, oil and whatever else. We're using electricity now, which means we need more energy generation. That is just a humongous macro trend that matters, right? And so I've been spending a lot of time just in and around that
Mm.
space, because I think there will just be, there's going to be more constraints put on the grid, and so we'll need to manage that, right? So that's a big one. I mean, I think that AI is like undoubtedly something that we all need to pay attention to. But there was a blog post that the firm NFX put out. I forget who NFX wrote it. I wish I could call them out, but they put it out a few months ago called AI is like water. And the idea behind the post is that like they were really saying AI is like bottled water, which is to say like it'll be packaged up in different ways, but like what it actually is in the bottle is the same, right? It's all the same. And I think that that's true, right? Like we're going to see that the models are going to commoditize very quickly. I think they're pretty we're we're on that path already, certainly with open source, which is one of like the most amazing things in the world. We're seeing how quickly they're commoditizing. With like the llama release last week. And as the models themselves commoditize, then what matters is how they're applied. And what matters is, and that's I think that is like the heart of this blog post, is the idea that, you know, whatever is under the hood is going to be largely the same.
Mm.
So what matters is the application, the workflow, all of this kind of stuff. Now, I think that there are like massive opportunities for both new players and incumbents to take advantage of this technology. But the way to think about it is more like infrastructure that is just going to be used, you know, in the same way that, I don't know, you like there was a moment when all of a sudden software started using databases, right? Like it's a piece of infrastructure that will be leveraged,
Mm.
versus, you know, it itself being something like a product, right?
Yes.
Like another way of thinking about this is, you know, is AI the next big platform, or is it just, you know, a tool? And I think it's pretty clearly a tool, right? It's going to be, right, at least that's my bet right now, right?
Well, David, it was extremely informative. Thank you so much for, you know, for your, well, for this amazing conversation and for your
Yeah,
time.
thanks for having me. Yeah.
No, no, seriously. And I hope when I'm in London, we can meet in person. But any final words you want to say before we end the call?
No, look, thanks so much for having me. It was a blast. It's fun to get to talk about, you know, deep cut VC stuff with people, you know. Most people don't want to talk about the inside baseball of venture capital. So,
Thank you so much, dude. You have a great day.
thank you.
All right.
Cool.
Bye.